A small software company just turned a $5 billion gamble into a $10 billion win without building an app, launching a product, or even shipping an update. Oh, they just bought a ton of Bitcoin. This isn't a crypto startup. It's a business intelligence firm from the 1980s, the kind of company your dad's IT department might have used. So how did MicroStrategy, best known for its super exciting enterprise software, become one of the biggest Bitcoin whales in the world? It all comes down to one wild strategy, one guy who really likes Bitcoin, and one company that basically said, screw cash, let's YOLO into crypto. In August 2020, while the world was still arguing about sourdough starters and lockdowns, MicroStrategy made a move that made Wall Street do a double take. They didn't buy a startup, they didn't launch a new platform, they didn't even rebrand. Instead, they went full crypto gene and started buying Bitcoin. Like, a lot of it. Fast forward to today, and that decision has earned the company over $10 billion in unrealized gains. On paper, of course, because this is Bitcoin we're talking about. But this isn't just a story about a random company hitting the Bitcoin lottery. It's about how traditional finance is being dragged into the digital asset world, how a CEO can completely flip a company's identity, and what happens when a public company treats cryptocurrency like it's a savings account from the future. Let's dig into how MicroStrategy transformed from a sleepy software vendor into a full-on Bitcoin shrine, and what that might mean for other companies watching from the sidelines. Before they became Bitcoin's biggest fanboy, MicroStrategy had a pretty boring job. They sold business intelligence software. That means they helped big companies stare at their spreadsheets and pretend they were doing something insightful. They were founded in 1989 by Michael Saylor and Sanju Bansal, two guys with a vision to make analytics slightly less boring. For years, MicroStrategy quietly helped telecom giants, financial institutions, and governments make data-driven decisions, aka graphs and charts that look nice in boardrooms. But then came the early 2000s. You know, back when the internet exploded and took half of Wall Street with it? MicroStrategy had to restate its financials, the dot-com crash hit, and the company's stock face-planted. Hard. Still, they survived. Not flashy, but profitable. No debt, some cash on hand, and a product that did its job. In that pile of cash sitting around, that's where things started to get weird. By 2020, Michael Saylor was getting nervous, not about competition or product market fit, but about the value of the US dollar. Interest rates were basically zero. The Federal Reserve was throwing money around like a DJ spraying champagne in a nightclub. Saylor didn't like it. He thought cash was losing value by the day. In his words, cash is trash. So he started looking for options. Bonds, boring. Gold, too shiny. Stocks, meh. Then he found Bitcoin. And like every person who's ever fallen down the crypto rabbit hole, he didn't just look into it. He went full Reddit thread, white paper devouring, laser eyes on Twitter, Bitcoin maxi. He wasn't just convinced, he was converted. Bitcoin, he said, was like gold, but digital, scarce, secure, decentralized, immune to governments doing dumb things. And instead of testing the waters, Saylor decided to do a cannonball into the deep end. In August 2020, MicroStrategy announced it had bought 21,454 Bitcoins for $250 million. Not for a new product, not for M&A, just because it was the first time a public company said, hey, let's put our cash reserves, the money meant to help us survive downturns, into the most volatile asset class in human history. Wall Street had questions, but Saylor didn't stop there. And a few months later, they bought another $175 million worth of Bitcoin, and another, and another. Fast forward to today, MicroStrategy holds over 226,000 Bitcoins, bought at an average price of around $15,000 per coin. And with Bitcoin now trading above $65,000, that stash is worth over $15 billion, giving them an unrealized profit of more than $10 billion. Quick math? That's more than the entire value of their actual software business. At this point, MicroStrategy isn't so much a software company as it is a Bitcoin mutual fund with a side hustle in data analytics. Now, you might be thinking, cool, but where'd they get the money? A question. Turns out they didn't just use spare change. They borrowed billions using convertible bonds, which are basically IOUs that might turn into stock later. And thanks to the rock-bottom interest rates at the time, they could raise money for next to nothing. Some of these bonds even had 0% interest. That's right, investors handed them money and said, no rush. The strategy was simple: borrow cheap, buy Bitcoin. Pray it goes up. Repeat. Shockingly, it worked. When Bitcoin was going up, of course, Bitcoin being Bitcoin, things didn't always go smoothly. From 2021 to 2022, the price swung like a wrecking ball, topping $60,000, then crashing below $20,000. MicroStrategy's stock also crashed by over 80%. Critics freaked out. "They're gonna get margin called," they shouted. "This is a house of cards." Saylor, meanwhile, shrugged and tweeted memes. He claimed the company's debt was structured in a way that avoided forced selling, and said they had zero plans to offload any Bitcoin. Eventually, Bitcoin rebounded, and just like that, the crazy guy started looking smart again. Still, let's be clear, this whole plan only works if Bitcoin keeps going up. If it crashes long-term, or regulators decide to make crypto illegal in one afternoon, again, things could go sideways fast. In August 2022, Saylor stepped down as CEO and became executive chairman. Apparently, running a public company while being a full-time Bitcoin evangelist was too much. The new CEO, Feng Le, took over day-to-day stuff. But let's be honest, Saylor never really left. He still tweets daily about Bitcoin, speaks at conferences, and casually reminds the world that MicroStrategy's true product is now hodling. The company is practically a Bitcoin mascot. As of mid-2025, MicroStrategy is sitting on over $10 billion in unrealized Bitcoin profits. Yes, $10 billion with a B. That makes them the largest corporate Bitcoin holder on the planet, beating out Tesla, Block, and basically every other company that dabbled in crypto and got cold feet. With Bitcoin hovering around $65,000 and their average buy price at $15,000, it looks like Saylor made one of the boldest and most profitable bets in corporate history. Of course, whether they cash out or just hold forever is another story. Now for the big questions. Should other companies do this? Short answer, probably not. Most CFOs would rather wrestle a bear than explain to the board why they just spent the treasury on volatile internet coins. You, like Tesla and Block, made small Bitcoin purchases, but nothing close to MicroStrategy's scale. Does this change how businesses think about money? Maybe. Saylor's take? That dollars are melting like ice cubes has picked up steam in some circles. With inflation sticking around and governments printing money like there's no tomorrow, some are taking a hard look at alternatives like Bitcoin. But it's still controversial. Bitcoin isn't regulated like traditional currencies. It's volatile and, let's be honest, it's not exactly accepted at Starbucks. And finally, what does this say about MicroStrategy itself? It basically reinvented its identity. It still sells software, sure, but to most investors, MicroStrategy is now just a Bitcoin holding company wearing a suit. That has huge implications for how companies think about leadership, long-term strategy, and what it even means to be a tech company. In a world where most companies are too scared to change the color of their logo without hiring 5 consultants, MicroStrategy went full ascend on the most controversial asset in modern finance. And somehow, it worked. At least, for now. But this isn't just a case study in high-risk investing, it's a story about conviction. Michael Saylor didn't just buy Bitcoin, he rebuilt his company around it. He ignored the critics, leaned into the chaos, and dragged corporate America kicking and screaming into a new financial era, whether they wanted to come or not. Will history call him a genius or a lunatic? Time will tell. But either way, MicroStrategy has already earned its place in financial history. All because they bet big, not on software, not on AI, not on the cloud, but on a bunch of numbers inside a blockchain.